This is a market review for February 24th, 2025. As you can see today, we played bearish once again. Closed right above this low. You'll be able to see market opened, and since we didn't retrace on Friday, we're looking for that 20 to 30% retrace on Monday. And if we highlight the weekly range, right, 20 to 30%, so like roughly here, market opens and we retrace perfectly 20-25% this morning. Or actually, it was technically like AM. Sorry, it was pre-market London session that did that. And then obviously we expanded lower, sweeping this low and this low, closing right above that closure or that low. Today was a no news Monday, so I went into today not expecting or not even looking to enter. We ended up getting accumulation out of London session. We had a little stray down and then up, but went back to doing nothing. So I was looking for accumulation, manipulation, distribution out of New York session. We kind of got that. So obviously accumulation, little manipulation up here, SMT of these highs, distribution lower. Lunch, we reworked and retraced all of this, perfectly filling in past equilibrium, and then algorithm kicks back in, and we take lower again with these lows. Now on the 15-minute, let's throw up lunch so we can see it. You can see these, well, you can't see the SMT because it's not on ES. Well, ES is not up, but you'll have to trust me. ES didn't make this high. So that, along with us taking internal buy side, would I have liked to take this high? Yes. But with this SMT here, and then a displacement, that's enough for me. Everything else on the 15-minute, we had this big 15-minute imbalance here. Like I showed on the hourly, constant encroachment, sorry, equilibrium of this move is here. Lunch comes up past that, so that once the algorithm kicks back in at 130, market is free to just take out the target liquidity, which in this case was sell side. Now on the 5-minute, we had, so this SMT, we started tipping over, and then market opened, spiked up, took another internal buy side liquidity to right here, displaced, left this 5-minute, we retraced up into that at around 45, and then we expanded lower throughout the macro here. Today, as you can probably see, I was focusing on the macros. So from 50 of the hour to 10 of the next hour. So that 20-minute gap of every hour. Because those are times when price is likely to either start a move or be the bottom of a move that allows you to enter it. And here you can kind of see that. So low of this move up here. This one's the low of this move up here. This one is the low of this retrace. Same one here. This one is this retrace up here, and this one is not doing much. But so that's something that I was looking at today. On the 1 minute, you'll be able to see some of these would have been able to, been actionable trades. Some of them not, but we'll get down to that right now. So again, the first minute candle is gone for some reason. 39.31. But SMT of these highs, we tip over, have this imbalance here, or these range of imbalances, fill it here, come down, market opens, we spike up, taking internal liquidity, internal buy side. But it's kind of like lunch in that aspect. It tends to take opposing liquidity before moving in its intended direction. Case in point, this. But once it starts moving, we're good. Boom. Down here, below this low right here, retrace up into this 5 minute. We have an SMT here. I actually didn't see this one, but I saw one of the people that I follow on Instagram point this out on the 15-second. But I obviously don't have the 15-second nor the experience to use it. So we'll stick with the 1 minute for now, and I'm okay passing up trades like this for now. So we come down, take out this liquidity, get close to this one, but boom, we're here during the macro. We retrace, take internal buy side, rebalance to this order block right here. Perfect, well, maybe not perfectly. Look at the low of this candle up here. It's 585.50. The high of this candle here is 585.25. So barely not there. Then we had lower, held by this imbalance here, concentric encroachment, good, closures up here. It's like the last line of defense. Then we had lower, failed to take out this low and this liquidity. Another macro kicks in. We failed to take out this low, but take out these two. And inverse order blocks, not really something I've looked at other than today. However, an order block is a change at the state of delivery. So we go from being bearish to bullish, back to bearish. And it's validated, in my opinion, when this candle comes up, rejects. Same with this one, up, and then closes right under it. So once we close above it, when price comes back down to it, given the timing and the macro, would I have been comfortable taking this trade? Absolutely not. But this is something that we could have, or that we can continue to observe to see if we can add it to the arsenal, I guess I'll call it. Then we get an expansion here. This macro, maybe even a little before it, tends to start the lunch move, so the run on profitable AM session trading, which is obviously sell side. So we're targeting this high here, but if we're thinking about a high time frame retrace of this move, we need equilibrium, which is roughly about here. So we get that supported by fair value gaps. Lunch here, we continue moving up. Again, here's another macro, right? 1150 to 1210. We hit the low inside this 1 minute fair value gap. What I'm looking at right now is, yeah, that's a volume imbalance. So technically, this here is an inverse fair value gap, validated here. And then here, actually, I don't think this is validation. I'm unsure, so we'll get rid of it and call it no. But with the validation of this one, with the validation and the use of this fair value gap here, after this expansion, we could use this fair value gap as an entry with allowing price to come. I would put my stop concentric encroachment of this wick because this right here, order block. So this is what the trade would look like. Entry would be there, stop would be here, profits would honestly probably wouldn't ask for much, maybe honestly probably just a 1 to 2, honestly. Just a little something light. Especially with lunch, our target here is already hit and we already hit equilibrium, but it's not time to tip over yet. I have seen times where price does tip over and by that I mean continues the AM session move during lunch, but that's usually in very, very expansive days. And today was an expansive day, don't get me wrong, but it doesn't feel as fast. Do you know what I mean? Like it doesn't feel as strong. I don't really know how to explain it, but it just because in my opinion, if it was strong, it would have taken out this low, and it would have just came up and taken this high and then gone down and not given a crap about equilibrium or just tapped into equilibrium here. But since we hit equilibrium and we kept pumping higher and higher and higher, it looks like we are waiting for the algorithm to kick back in before continuing bearish. Here's another one, another macro, another reversal, take out internal buy side liquidity, filling in more of this fair value gap over here, but there's nothing you can enter on within here. Order block, maybe, but again, not a very, well, maybe a mini trade. If you enter at the high, stops below the low, target this high, you get a 1 to 3.7. It's possible, but worth it, in my opinion, I don't know. Maybe the more and more I study these macros, the more confident I'll be in their ability to continue a trend, because that's what it looks like now. Is a lot of these macros are points of like retraces, like the low of the retrace. Because what it's 1 here, 2 here, 3 here, 4 here. Even this one, 5, I guess you could say, because that started a retrace. No, this was a retrace, so not a continuation. So that's different. Small SMT up here, causing a little retrace, but in my mind, that's what tips us over. All right, we get this SMT up here, the indecision between the indices showing that it wants to come take out all this liquidity that it created in AM session, especially these relative equal lows down here. So we get that. This high, this wick right here, this white dashed line is concentric encroachment of that wick. We see this wick perfectly hit it, and this one go 655.50. It goes 3 ticks above it, creating this SMT, which again, inside the macro perfectly, boom, hits this concentric encroachment. Entry would have been, if I was strictly limiting myself to the macro, I'd be in here, but in my mind, this is close enough. These SMTs in my mind have already sealed the deal, like these highs are protected. Once the algorithm kicks back in, it looks to take opposing liquidity before heading with the continuation of AM session. We already took buy side here, so in my mind, protected high here, not going to come above that. So if I stick my stop loss, probably concentric encroachment this wick to be safe, and then target lows here, 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 and here. These would probably be my finals. But in reality, which would suck, is I'd have profit here, and I get stopped at a break even. So there would have been a lot of food on the table, but we take what we can get, right? It's not about capturing these huge RRs. It's about building good habits and consistently using your good habits and not falling into bad ones. So once we hit this move, it kind of trickled down. Not many imbalances created. One here, order block used over here, displacement. Another macro kind of starts a retrace. Not much to talk about with that one. No imbalances, no nothing. And then we just basically a continuation of AM session, just taking out this liquidity, which appears to be the goal of the day. I'll say, looking at these macros, they look like turnaround points, I'll say. Meaning that either as a price is going down and it's the low that starts the retrace, like this, or price is going up and the macro happens at the low of the retrace and then starts the continuation of that. Like this one, and this one. Heck, even this one, because we tip over, boom, up, macro, down. This one I would say classifies here. We're coming down, boom. This is a decently large leg compared to the rest of it without retracing. Mind you, this is pretty much all balanced because there's, we'll say price took its time. But this is low, almost right in the middle of the macro, retrace, and then we continue. So I will be looking at these macros tomorrow as well. Speaking of tomorrow, with us being, that's a decent sized buy side wick. If we want to keep tanking, I think we can. I don't want to call a high that stopped at constant encroachment. Not looking the best. We'll see what London does. Like usual, we've kind of been in this consolidation here. We've been going up. I don't know. Here's the thing. If price wants to retrace and go down, it very well can. This wick as a high of the week doesn't look out of place. I mean, this is the low of this week's wick. Mind you, we gapped. This one's larger, larger. These are all large wicks, but if we're trending, like this tiny wick, mind you, discount, tiny wick here, it fits in. I wouldn't hate to see more bearish price action. We did just take out this low, so London, in my opinion, is going to have to retrace, at least somewhat. I don't expect a full body retrace just yet. I expect that after we take out this low. But obviously, we're not in trending conditions. I mean, just look at what's on the screen right now. There's no trend. We're going up and down and up and down and up and down. Perfectly tapped back into this inverse. If we look at the closure of this candle, look up there, we get 21,804.75. The high of this one is 21,700. I lied. We're about 100 handles. Hold up. That doesn't make sense. Look at the close. 21,804.75. The high of this. There we go. 813. I was looking at the wrong number. 10 handles into this daily inverse fair value gap, and we get a rejection. In my mind, that sets us up higher time frame to be bearish. So tomorrow, I am officially looking bearish. Tomorrow, this weekly wick, I'd be okay keeping, meaning if this doesn't make a new high, I'm okay with that. Because we took out this low here, might get a small retrace, maybe up to here above this high. But as for tomorrow, targeting these lows. For now, again, we'll see what London does. But again, we are reacting to price, not trying to predict it. But we set up situations so that we're not surprised when it happens. All right, this has been your market review for February 24th, 2025.